All right, today we're going to put one of India's biggest companies, Reliance Industries, under the microscope. We're not interested in the noise or the speculation. Nope. We are going straight to the source, their financial reports. We're just going to look at the raw data, quarter by quarter, and see what the numbers really have to say. Let's dive in.
I mean, think about it. Reliance is this massive, sprawling company. They're in everything from oil and chemicals to digital services and retail. So with so much going on, how do you even begin to get a clear, honest picture of how they're really doing?
Well, it's actually pretty simple. You follow the money. And that's exactly what we're going to do. We're going to track their revenue, their expenses, their profits, and piece together the financial story one quarter at a time. It's the cleanest, most direct way to see what's actually happening. First things first, let's talk about the top line, revenue. This is basically all the money coming in the door from sales. It's our first big clue about how the company is growing and whether people are buying what they're selling.
So let's start the clock in the first quarter of 2023. That's the period ending in June. Reliance brought in just over 1.2 trillion rupees. Now, that's obviously a staggering number by itself, but for us, what's way more important is the trend. Think of this as our baseline.
Okay, so you have that number in your head. Good, because in the very next quarter, ending in September, that revenue number shoots up to over 1.4 trillion rupees. That is a huge jump in just 3 months.
And here you can see just how big that jump was. We're talking about a nearly 17% increase from one quarter to the next. That points to some really powerful momentum in business growth right in the middle of 2023. But as we all know, revenue is only part of the picture, right?
Exactly. So now we've got to look at the bottom line, because it's not just about how much money you make, it's about how much money you actually get to keep. So let's get into the profit puzzle. You know, there's that old saying in business, and it is just perfect for this. Huge revenue numbers, they look great, they're vanity. But profit? That's sanity. That's what tells you if a company is truly healthy. So you have to understand the gap between the money coming in and the money going out. And this is where it gets really, really interesting. So remember that incredible 17% revenue surge between the first and second quarter? Well, at the same time, the cost of their materials, which is their single biggest expense, jumped by over 23%. So what that tells you is that their awesome growth, it came with a pretty steep price tag.
And wow, this chart really drives that point home. Just look at how massive the cost of materials is. In Q1, it was 808 billion rupees. It absolutely dwarfs every other expense. This means their profitability is incredibly sensitive to the global prices of raw materials. It is without a doubt the #1 factor for their bottom line, period.
Okay, so we've got a company this big and diverse. Where is all this performance actually coming from? Which parts of the business are firing on all cylinders? Let's break it down and find the real engines of growth.
Now this slide, this is really telling. Take a second and just look at these numbers. Their traditional heavyweight, oil to chemicals, is still the biggest profit generator. No surprise there. But check out the growth somewhere else. The oil and gas segment's profit has just skyrocketed, jumping from under 3 billion rupees to over 32 billion. And at the same time, digital services has more than tripled its profit. This shows that their whole strategy of branching out is really, really paying off.
All right, so let's just take a quick pause here. We've looked at revenue, we've dug into the profits and the costs, we've seen where the growth is coming from, so now let's put it all together, zoom out, and see what the big picture trend looks like.
This timeline really tells the story, doesn't it? It's a story of incredible resilience and powerful growth. You see that big dip back in 2020 during the pandemic, but then look at the bounce back by late 2021. And from there, it's just been steady, consistent growth, all the way to a new high of over 1.5 trillion rupees in revenue in the last reported quarter. The trend is unmistakably, powerfully upward.
So if we boil all this data down, what are the big takeaways? Well, first, their revenue is growing, consistently and strongly. Second, you have to watch their material costs because their profitability is completely tied to it. And third, while the old school business is still king, the new kids on the block, like oil and gas and digital services, are expanding at a wild pace. They're quickly becoming the major growth engines for the future. When you look at the numbers, and only the numbers, you see a really clear picture. You see a company that not only weathered the storm, but is now growing faster than ever before. The trend line is strong. So the data leaves us with one massive question, the multi-trillion rupee question, really. Can they keep this momentum going?